Hi and welcome to the Market Alert for Monday the 4th of October 2021. So the Nasdaq suffers worst week in 7 months. Bonds, gold, crypto and the dollar were higher. US sovereign risk is at its highest since the 2015 debt ceiling debacle. We've also got Biden fails to clinch infrastructure deal with Prog, says doesn't matter when bill passes, is ordered by staff not to take questions. You'll notice this, he's not allowed to take any questions at all because the man's a buffoon. And he's going to get them into a lot of trouble, so they're keeping full control of him. Could you imagine if this was the case, if Trump was in? I'm not a fan of any politician, just to make that clear. But the vilification that man received was unprecedented, and twice they tried to impeach him. If he'd have not taken questions or said that any infrastructure bill was going to cost zero, they'd have put him in an asylum. It's just bizarre. But then the progressives do have hold of the narrative at this time. The communists more the case, I would have thought. At the end of his remarks, Biden offered to take questions from members, but his staff jumped in. He didn't take any questions. No, he's not allowed to, just in case he lets the cat out of the bag. What to fear most? The US system looks in crisis, and that's bad. Everyone is running for the dollar, thinking it's the flight to safety trade. Time to buy gold. Central banks have been buying gold since 2010 by the ton. Fed's favourite inflation signal surges at its fastest pace in 30 years as savings slump. Inflation soaring and savings slumping, not pretty. And finally, the insanity continues. Housing's on fire, literally burned out. Boston home selling as is for $400K. House is in need of complete renovation and a potential tear down and rebuild. This will cost you $400,000 if you want it. If you've got no brain cells left and you want to buy it when on the cusp of everything collapsing, then you deserve everything you get. Implied volatility down on Friday as the Dow made a significant recovery reversal all the way through the day as either the Plunge protection team or people came in, or the retail investor came in and bought. News, which I forgot to give out on Friday. Apologies for that. So let me do it while I'm thinking about it. Today we've got OPEC meetings. So it's all about energy again for today. As we go through the week, again, we've got central bankers out tomorrow. We've got the criminal Lagarde out and Qualls we've never heard of. Wednesday, we've got ADP. So that means it must be non-farm payrolls this week if we're getting the ADP on Wednesday. Got the unemployment weekly numbers on Thursday and Friday. Yes, we've got the big one. It's the non-farm payrolls forecast at putting on another 490,000 jobs outside of the farming sector. So again, we'll wait and see what happens there. Let's have a look at the Dow for last Friday. Like I say, massive reversal back during Friday's session. They kicked off and that's the way it went. It went from 10 a.m. or just before 10 a.m. in the morning and never stopped, apart from a bit of a sell-off on the open for the Dow. As soon as that managed to recapture and the Plunge protection team came in, they moved the market back to the upside. Massive move on Friday. The range for Friday's session was just 969 points for the Dow. So a big range on Friday. Meanwhile, in the DAX, we saw a similar thing, the market trading down to the low here. It was something 19, if I recall. If I just put that in, there you go. 15,019. Market finding support here. We'll look at this in more detail in a moment, and then the market reversing. However, overnight seems to be a bit of pressure in the DAX on the downside, as we can see here in the 30-minute chart. But on Friday, like I say, the market moved lower, and then it was up. We moved lower with the Dow, and then we were back up. And we're up on the overnight. We're actually making some ground up at the moment at the DP. Need to take out the high of Friday again and the overnight high now as well in order to move to the upside from here to here. That's the sort of areas of resistance. We've been through the 50. 62 is where the market stopped overnight, so we need to take this out in order to move higher. Failing to do this, we'll retest down to 78. The 019 and also the 89 and the other resistance to the left there as well. So we'll see what happens when the futures market opens. Meanwhile, in the metals, surprise, shock and horror as silver was once again allowed to move higher during Friday. Tried to move higher once again overnight, but if we have a look here, you'll see that we've got some resistance at 89, bang on there at the moment, drawn from there to there and projected back. So if we can get through this one, then we should go from here to here, and I'll just remove the other one, and that will give you a new 89, which is at the 20 bar moving average. Overnight, let's have a look at the 30-minute for silver. You can see that we shot up initially and then we've pulled back to 22.50, which seems to be some sort of support at the moment. That's twice the market's been allowed to bounce off this area, and it currently is attempting to move higher. A bit more detail there in the 5-minute chart at this area. No great volume though. There was a lot of volume here when it opened and started to move to the downside, but as we got to the support here, it's as if all of the selling's disappeared and prices have been allowed to move higher. We'll just have to wait and see. I'm always nervous when the silver market starts to turn around and move back to the upside because it just doesn't hold, does it, at this time. Gold sideways to higher, and same on the overnight, which has resulted in the gold-silver ratio moving down. So silver's become more expensive to buy, given that picture at the moment, which we can see then. That's because gold isn't moving as fast to the upside as silver is at the moment, which is again unusual, isn't it? Okay, let's have a look at Friday's action. Let's just bring all of this back so we can see where we are. It started off by just keeping the daily chart up so I could see what was happening in the futures. The market coming down to that 15,019 area, and the 200 MA market started to hold there. There's the move in the futures, which obviously I didn't record, and then the market coming back and retesting here. But as we just saw that the market move lower, went down towards the 19, and you get your retracement, and then up. Prices moving to the upside there. Then we've got the news, and then we had a sell signal, and this one producing a good 50 points there as prices started to find support and make their way back above the 5-bar moving average. So then we had a potential buy signal, the market attempting to move back to the upside there. I also drew in a 78 and 89% retracement from here to here, projected back as well, as the market attempted to move higher, having already moved a good 70 points. It was a case of let's just see what happens, and as it started to come back below the scalp and 5-bar moving average, out of the trade there. Few points, nothing to write home about, but a good first trade on the short side, and then the other trades not filled. So I'm going to fast forward through the morning. We had the I think this was the core CPI, and then we had the manufacturing figures on the afternoon. As we saw in the 30-minute chart of the DAX and the Dow earlier, that the market sold off initially, and then another great trade. It was a good day on Friday, actually. The volatility was just nice, and there you can see another 50 points as the market started to pull back there. And then we've got the news anyway, even though the market continued low. A bit frustrating, but you can see that the news then came out about the same, if I recall. The figures were more or less the same, and then the market just trading sideways to lower, following the Dow. And then once the Dow turned, this brought the DAX back throughout the evening, which you can see there with a final flurry of a potential buy signal there. I didn't do that one, I wasn't at the desk at that time. Moving back up, and that's of course it continued to the upside as the evening. I'll find the chart and go back to the 2 minutes, just have a quick look. and that's where we were. And you can see once the Dow had finished its shakeout, and then it moved higher with the Plunge protection team as they brought the Dow back up that 900 points throughout the trading session, which is some move for the Dow. That was some move. So what time was this, just out of curiosity? Yeah, so just after 4 o'clock. 4:30, 5 o'clock is when they started to bring the market back. So yeah, that ties in beautifully. Okay, that's it for this one. Let's see what happens this week as we head further into carnage with inflation, price increases, or energy crisis, I should say, and all sorts of other things. Whether Biden will get his bill through, he's certainly not going to talk about it, and he's already said it's going to cost zero. So the madness continues. Okay, that's it for this one. If there's anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.